Welcome back, everybody. Welcome back to a stupid week of more volatility, more ups and downs. It did look for a second there like everything was going back up, but reality is starting to fight back. Everybody has their own theory on whether there's going to be a second crash and how bad it's going to be. And guys, stick around to the end of this video because at the end there's something I want to talk about and there might be some free shares up for grabs. So if this second drop is actually going to happen, let's have a look at when it might be. Welcome back, everybody. If you're new to this channel, my name's Paul. Like a few of you guys, I started an investment journey only a couple of months ago. During that time, I made a lot of mistakes and then there was a big market crash. And now this channel is all about me trying to keep a strong stomach and just get through some really bad times. Like many people during the crash, I've put in a lot of money into companies that I think are sound and going to get through it. But it's starting to look like there is a real chance that there is going to be a second dip after this. There are many theories out there on how big it's going to be and how long it's going to take. So today we're just going to look at what might be the causes of it and how long I'm preparing for this to go on for. The market was really positive at the start of the week and some companies have just done exceptionally well. Most are still sitting in the same spot, going up and down uncontrollably, people trying to make short gains, and there's just loads of resistance from above and below. Some companies like Microsoft, Johnson & Johnson and AstraZeneca have already fully recovered, and AstraZeneca is even hitting all-time highs. Some are saying that's a really positive sign for a V-shaped return. If one company is recovering particularly quickly, there's an outside chance that the rest could follow suit. AstraZeneca is kind of in its own game though because it's a pharmaceutical company that's working on vaccines and treatments. It hasn't shut down at all during this crisis. You've also got the fact that America really does want to open back up, which I'm sure would be great for their economy, but we'll discuss why that might not go to plan. Also, in the UK and Europe, cases are definitely flattening out, and there's small ripples of talk of easing up restrictions. Again, kind of positive, but also could be very negative in the future. So with all this positive economic news, why might we see another crash again? Well, first of all, the virus isn't over. In Russia and India, things are just getting started. And it's very possible that if America opens back up too soon, the UK opens up too soon, there's going to be a second spike in cases and things could get a bit hairy again. In the UK, I'm not so worried. As someone who has first-hand experience of all the things that are being done to combat this virus, I feel like the UK is in a really good position right now to deal with it. The UK is well below hospital capacity, people are sticking to their social distancing, and the number of cases is really starting to flatten out. It's a good sign that things could be back together again quite soon. The US worries me a little bit more. Trust me, I am well up for them opening up again. The quicker they can get their economy started, the quicker I start making money. But it may come to it that all these protesters and stuff in Texas, if they open up and then something goes really catastrophically wrong, like loads of them start dying, they will shut down again, and that will cause a massive problem. I really do appreciate what they're trying to do. They want to stay open. They don't think it's that unsafe. And if they're right, they're going to get their lives back. But if they do open up and then they realize they fucked up, that's going to be a big problem for all of the world. For me, that is the main factor in all of these things. It's about when everything's going to open up again and how long this virus is going to go for. And I think this week we started to see a bit of optimism about that with the cases in the UK flattening out and America just not caring. But there's still a really good chance that none of that matters at all. The other third indicator in why this crash might not be over is that my boy Warren, he ain't done nothing yet. Berkshire Hathaway is a different kind of investor. I don't think Warren Buffett is sitting at home on Trading 212 clicking buy and sell all day. The guy has so much money sitting around, he has access to deals that you and I can't make. On a normal day, I just imagine he's sitting around a table while Charlie Munger just bats people off with a newspaper. But there's a few reasons why Berkshire Hathaway hasn't really done anything yet. First, we've got to look at what they have done, and all they've done so far is sold. Many people saw it as a bad thing that he sold his shares in Delta Airlines, when the truth is he didn't really sell many shares in Delta. He also sold in Southwest and Bank of New York, but he didn't completely sell out. He brought himself under a 10% threshold of ownership in the company. That's a very strategic move because it means he claims less ownership of the company. He becomes less of an insider. He owes less to the company when they sell, and he doesn't have to tell many people about it. So if he were to buy back into Delta, or maybe do a takeover of Delta, he wouldn't have to tell you and I for like over a month. And believe me, when Berkshire Hathaway makes a move on a company, you and I are going to be the last to know. So actually watching Berkshire Hathaway and waiting to see what they do is not really a good plan because you will miss out. Arguably, buying into Berkshire might be a good idea. I've bought a share in it just to see where it goes. Also, Charlie Munger, who is Berkshire Hathaway's second in command, he's saying that the deals just aren't out there. He has a quote out there that says that CEOs are just frozen at the moment. He's saying that the phone just isn't ringing off the hook with CEOs looking for bailout. And he puts this down to them being frozen in place. That seems like quite aggressive wording to me, when there is the possibility that all these CEOs just think their companies are going to be fine and they don't need a bailout from Warren Buffett. I haven't seen that theory out there. That's one I've just made up off the top of my head. But it makes sense to me that most companies feel that this is a short-term thing. They're going to come out the other side okay, and they're just going to make back their earnings slowly once it's all over. But what do I know? Every single news outlet out there releases a depressing statement in the morning and the exact opposite later in the day. They're just covering all their bases and just putting shit out there for you to read. So that's everything that might bring an end to this and cause that nice V-shaped recovery. But there's lots of people out there predicting far, far worse. People are talking about Great Depression. They're talking about a 2-year, 6-year recession. And these theories are not baseless. Lots of technical analysis experts say that we are at the top of a recession. And there's the possibility of a long, slow drop coming. And that's pretty scary. Lots of people are comparing this crash to the 1929 and the dot-com bubble crash. And we are scarily following a similar trend. In 1929, there was a big drop, and then there was a nice big bull trap, and then boof, straight back down again. Same with the dot-com bubble. There was a big drop in 2000, it went back up again, everyone thought it was over, and then boosh, everything just kicked off again. In this crash, today, we are right at the top of that second peak. If it follows the trend of these previous two crashes, we are in for a long, hard few years. Particularly me, who has just worked on putting a lot of money in. I'm going to need a stronger stomach than someone who, say, has been investing 10, 20 years, who is just losing a little bit of their gains. I'm actually losing some of my money. I'm not going from 100 grand to like 60 grand. I'm going from 10 grand to like -10. That's where I am. So it's quite scary, and I'm really going to have to hold tight. Most people are expecting that this big move up or down is going to happen during the Q1 earnings reports. That just so happens to be this week. And even more exclusively, I think that's going to be tonight, because Coca Cola is a real important company that's being used to gauge this crisis. And it releases its earnings report tonight. Yeah, I know some companies released their earnings reports last week, but really, Johnson & Johnson, everyone knew what was going to happen there. Everyone knows they're doing fine. It's like if Carnival released their report and go, oh yeah, we lost money this year. Everyone would be go, all right then, yeah, thanks, we know. The Johnson & Johnson release made absolutely no difference to the market. Everyone knows they're just going to do well. And one of my favourite companies released their earnings report this morning. The headline for Associated British Foods is that they lost money this morning. That is the headline that all the news outlets are jumping on. But actually, what's more important is what AB Foods said. Firstly, and it's not surprising, they cut their dividend completely. Bit of a shame, but it is one of them things that was going to happen. For those of you that don't know, AB Foods owns Primark, which is shut. So it's very realistic to assume that they haven't earned any money recently. However, their earnings report wasn't as bad as expected. They did a lot of cutting, they were quite ruthless, and it saved them a lot of money. They basically did what they had to do. And tonight we've got Coca Cola coming. Coca Cola is the big one for me, because Coca Cola is one of the companies that has been both badly affected by the crisis, but also at the same time, their stores are still open and there's still a lot of business still working. If their earnings report isn't worse than 0.45, which is what it's expected to be at, and they don't slash their dividend by too much, Coca-Cola could be a good signal that it's not as bad as we think. And if earnings reports are dead on what they're supposed to be, then it's a sign that we've got a good handle and a good guess on what's about to happen. It adds a little bit more certainty to an area where we just don't know what's happening. And investors prefer certainty. So if Coca-Cola and all the other earnings reports right through till the end of May all come in at about the right amount, then I think we're still going to see a little drop, but I'm not sure we're going to see that massive catastrophic depression. Likewise, I'm also not into the L-shaped recovery. Again, I've still got to believe that we're in for the crash, but it's not going to be that bad. I have to believe it, because if I don't, I should sell all of my stocks that are in profit right now. I'm looking for a square root kind of recovery. One where we've had the big drop and then we've gone a little bit up to recover, and then we're going to see a little curve upwards. That would be ideal for me. But even if I'm wrong, I'm still in it for the long term. And while there will be a few years of pain and a few years where I just cannot touch my money, eventually the stock market will recover. I just need a strong stomach and to continue investing through the downturn. If I just keep trickling in money over that course of time, I'll start to see some really good gains eventually. So the answer is cost averaging. I should get this written on a t-shirt, cost average or something like that, shouldn't I? I just need to keep averaging down and just go with it. But the most important thing, and it's even more critical right now, is only spend money that you can afford and that you're not going to need for about 10 years. I mean, if it really is as bad as 1929, I think that was about a 26-year recovery. So have a think about that. Think really hard. So taking a look at my portfolio, what I'm going to do from now is pay real good attention to what is still on discount. My spending is going to be a lot slower, just in case, but I'm not going to stop. I've still got quite a bit of cash left around that I still need to put to work. There are certain companies which I'm going to really hold off on. AstraZeneca is one of them because it is just topped so far. I feel like I've missed the boat on that one, and my money could be spent somewhere where I am going to see a bit more gain. Coca Cola is probably going to get it because it is probably going to recover after this drop. As you can see with the earnings report coming out, it's already taking a hit. At 230, it could do anything. Diageo is basically the UK's Coca Cola. It's got a really good chance as well. It's been hit hard like Coca Cola because tourist attractions and everything like that has all been shut down. But supermarkets are open, and like Coca Cola, people are buying more of its products than ever in the supermarket. It's just missing out on all that tourism and all that attraction stuff. Coca Cola might be a really good marker for how Diageo might do. Facebook is a pure growth stock that is probably going to do well. Amazon and Wish and all that, they aren't closed. And Facebook has an advert right in front of your face every 5 posts. So it's still making all the revenue it needs. Johnson & Johnson is another one where I think we've missed the boat. It might be worth buying 1 or 2 to get the dividends, but at the moment I feel like it's a bit overvalued. It's not on a discount anymore, and there's plenty more out there that you could earn on. Mackey's, who knows? Fuck knows. Fuck knows what's going on with that company. I can see me doing an entire video on McDonald's because the company is so complicated at the moment. And then with this crash, fuck knows. Microsoft is one solid company that also I think we're starting to miss out on. If there's a bit more of a dip today, I might buy one more. But other than that, I think the boat's being missed again. It is a solid company. It's going to do really well in this crisis. You're pretty much, if the market's going to recover, on your last chance to get Microsoft at a discount. But obviously, if the market crashes, you're fucked. Realty Income is one company that I still think is undervalued right now. Fair enough, a lot of its buildings are retail and it's taking a beating at the moment. But this company is serious about keeping its dividend and it will come through. That's me. It's a bit of blind faith, but it always has and it should always do. Fucking oil. Oil was like minus 37 yesterday. I don't know if anyone knows what that means. But even though they're basically paying you to take oil off them. Shell has made an agreement to only supply with carbon neutral companies. I think that's a good move. I really think that's going to play well with the public and even better with the companies that are trying to please the public. Especially right now when the world's giving us a wake-up call that we need to take a bit more care. I think Shell's got a real chance of coming back hard, even though it's really suffering at the minute. And finally, it's time to talk about Disney. Keep buying. Just keep buying. This is me talking to myself, by the way. This is not advice. For me, I just have to tell myself, keep buying, keep buying. Where's Walt Disney going? Walt Disney is going to be around forever. It's just released a streaming service that is almost catching up with Netflix already. And eventually, the parks will be open, right? Disney is totally undervalued. That stock is easily hitting 200 within the next few years. Walt Disney is a buy and hold stock, and I am going to go even harder on them pretty soon. So there you go. That's my portfolio at the moment. I have 44 investments. There's advice both ways, whether you should only have 10 in your portfolio or you should diversify well. My target is 50. I don't plan on buying over 50 companies. I feel all the companies that are in my list right now are pretty solid and I'm hoping to hold on to them forever. And from now, there shouldn't be many more additions, and all of my spare cash, that will all go into increasing my value in these companies. Yesterday, my portfolio was up about 2%, so we've easily cut that in half today. And I think at 2:30, the S&P 500 is going to take a big bash in, so I could easily drop back into the negative again today. Okay, so I feel like that's been quite a long video. That is a lot to edit. Excellent job if you've made it this far. And I want to give you a little reward if you did make it this far. I'm guessing you guys want to know what I was talking about right at the start. And guys, stick around to the end of this video. Yeah, remember that bit? Well, at this time of the video, I would usually be here saying, hi, thank you for watching. I've got a free link from Trading 212. If you click it and sign up, you get a free share. I get a free share, blah, 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 blah. Trading 212 puts a limit of 20 shares on each link. And I ran out a long time ago. Since then, all my family use Trading 212. So I've been using my dad's link. I've been using my brother's link. I've been using my wife's link. They're all full as well. It's getting to the point right now where so many of you guys are signing up to Trading 212 that I'm filling up these quotas in about a week. And I'm totally running out of accounts that I can share the link of. I can't be like calling up my great uncle John and go, hey, John, does your dog have a Trading 212 account? Either Trading 212 needs to offer out a link to YouTubers, because I'm sure there's lots of UK YouTubers who have also filled their links a long time ago. And at the point where you do stop receiving shares, people can still sign up through your link, but you don't get one back, which is a bit of a shame because we make this content, we work really hard. It would be nice for Trading 212 to set us up with a nice link, but they're just not in contact and they don't really want anything to do with us really. So basically, after I receive 20 free shares, their free share payout goes down by half. So I've got a bit of an idea that might work to keep them paying out some free shares. And that's where you guys come in. I don't care too much about the free shares. They were just a nice thing for me to get while I was making these videos for fun. And that's what I'm going to continue to do. But what I'm thinking is that you guys might benefit. So what I want to do at the end of each video, rather than me saying, oh, we get a free share if you sign up, I want to make it so one of my subscribers gets a free share and that new subscriber gets a free share as well. I also hit 1,000 subscribers this week, which apparently in a month is a really big deal. I've only just started researching all the YouTube stuff and I didn't know that. And fucking wow. Thank you to everyone. So this is also a bit of that as well. I'd love for my regular subscribers and regular commenters to maybe receive something back. So what I want to do, in the comments below this video, I would like you guys to copy your link and paste it to there. Then I can pick those links up and I can add them to the bottom of my videos. There's a couple of rules though. Number 1, you got to be subscribed. Number 2, you have to have commented on another video as well. I really want this treat to go out to people who regularly watch my videos and who have got me to this point so far. I know who you guys are. I read all of these comments and I reply to every single one that YouTube puts in front of my face. So I know and I recognize a few of your handles. And number 3, the comment you have below can't just be the link. You have to write something else with it. So just something like which video you want it to be on or what's your favorite video and why. And it's because I just discovered yesterday the spam folder for comments, likely to be spam folder. And I didn't realize how many people just post their Trading 212 link on my videos. It's a lot. It's a hell of a lot. I can't believe it. So if you don't make your comment in the comments below at least a little bit interesting, YouTube is gonna just bosh that in this spam folder and I might not see it. So just something simple, just like paste your link and like what video you want it to be on. And that's important because number 4, I'm probably gonna change the links on the videos every month or so, just so everyone gets a chance. So it'd be great if I saw your comment and I could just copy and paste your link to whatever video you would like to be a part of. And then I'll be adding somebody's Trading 212 link to every video in the future. Does that sound okay? Seems a bit long-winded, but you get the point, right? It would be awesome if I could just get some of you a few free stocks and maybe finally put to bed all the rumors that I'm some plant from Trading 212. Seriously, this is not a conspiracy. I'm just a dude who started investing in Trading 212 and I started making some videos. I really don't know who they are. Yeah, there's a lot of people out there who think I work for Trading 212. So that's what would be awesome to do. And that's my next challenge, and a bit of a thank you for getting me to 1,000 subscribers so quickly. That's all for today. Don't forget to like and subscribe and share and all that shit. Thank you so much for watching, and I'll see you on the next video.